Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD for Friday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, as you can see on the screen that gold little changed. Upward trajectory likely medium term. Okay, so gold price are little change in early Asian trade after settling overnight at a more than a year high on declines in US Treasury yields and dollar weakens. Dollar steady after Fed's rate pause hints. Dollar was steady on Friday after 7-week lows as nervousness over the banking system kept investors skittish and traders absorbed the Federal Reserve's hint of a pause to interest rate hikes. So my dear friends, this is the overall sentiment of the market right now. So market has more or less absorbed the news that the Fed is about to pause the interest rate hikes. So as a result, we can see some sort of recovery on the chart of dollar. And if we look at the chart of gold, then we can see that our gold made a high of 2002. Okay, and right now showing some correction. So let's have a look at the chart one by one. First of all, DXY. After FOMC, DXY made a low of 101.93, and after the low, okay, DXY has shown good amount of correction recovery. You can see that DXY is right now standing at 102.65. So overall, if you look at the sentiment, then we can see that yes, there is a possibility of some recovery because more or less market has absorbed the news. But if we look at the chart, then the chart is still saying that this market is under the dominance of sellers. So for us, the important level on the chart of DXY is 102.85 to 102.67. This is an important level on the chart of DXY for technical analysts like us, for traders like you and me. Why this level is important? Because you can see that in this type of market, okay, usually we get to see market hitting the resistance and going down, and this level 102.85 to 102.67 looks like a resistance level because we have taken the help of Fibonacci and we have considered both the highs here. You can see we have considered both the highs and we have drawn Fibonacci and we have derived this level 102.67 to 102.85 seems to be a resistance not only because of Fibonacci, but if I zoom out the chart, you can see that this level was the previous support. Okay, so previous support will also be acting as the new resistance for the market. So if we combine both the factors, then yes, dollar should face some resistance around this area. If dollar reverses from this level again, we will get to see upside on the chart of gold. In case dollar is steady enough, in case dollar is strong enough to break this level, then we will get to see further correction on the chart of gold. So this level will be very important for Friday, 102.85 to 102.67 on the chart of DXY. So as you can see that almost market is standing at a resistance only. Now let's have a look at the chart of the gold XAUUSD. To be honest, I was looking at the Forex time frame and I saw market forming a double top kind of a pattern. So usually double top signifies market going down. But if we look at the news, then we can see that medium term, okay, the medium term outlook is quite bullish. So as a result, okay, at least for Friday, okay, we can consider the market to be bullish only because after making a high of 2002, we can see the market is not going down sharply. This is the Forex time frame. So for the last 10 to 12 hours, market is still trying its best to go higher. But on the Forex time frame, we are not getting a clear view. So I have switched to the hourly time frame. On the hourly time frame, I can see a clean uptrend market. Okay, I can see a clean uptrend market, and as we all know, trend is our friend. Okay, and in this type of market, buy at dip, or in simple words, buy at support is the best trading strategy because the institutions, the market movers are taking a buy position, billions of dollars buying is going on. So if I take a sell position, I may get trapped. So as a result, taking a buy position in an uptrend market is the best trading strategy and the most simple also, okay, you can follow. In this type of market, okay, our duty is to find out the support. So right now market is standing at 1993. This is the current market price. So the next support on the chart of gold seems to be around 1969 to 1964. Sadly, this is the only support level in front of us right now, and the reason is, you can see we have moving averages around this area. Okay, here we have the moving average, 100 moving average, and also the 50 moving average around this area, as well as we have some price rejection around this area, previous price rejection, plus around 1964-63 level we have the Fibonacci. So this level, this whole area is a support zone on the chart, for the chart of gold. So in case market shows a downside during the day, if gold falls, if you see that gold is coming for correction, dollar is showing good recovery, in that case 1969 to 1964 is a support zone. Right now I'm recording this video during the Asian session, so obviously the moving averages will be going higher during the European and US session. So yes, levels may change, so please be careful with the levels. Okay, and as I always say, do not gamble with your hard-earned money and do not trade blindly. No level is permanent in the market, but our capital is limited. Do not forget that. So if market comes down to this level, if market takes support around this area, if you see the market is after hitting the moving average or the 1969 level, 1970 level, if you see the market is forming a hammer pattern, then only go for a buy position. If market shows good price rejection from below, then only go for a buy position. So this is the only logical support in front of us right now. And if market shows bullishness again, because the market has been very unpredictable for the last couple of days. Okay, so if market shows extreme bullishness during the European session and the US session, you can consider taking a buy position also, but for a safer side, consider taking a buy position above 2010 only. If market breaks this level, observe the volatility of the market. If you see the market has the volume, means the size of the candle is good enough. In simple words, if you see the market has volume, then only go for a buy position. If you see the market is trading above 2010 level, but the size of the candle is not convincing enough, it means that though market is showing a breakout, but market does not have volume. For a proper breakout, volume is extremely important. Without volume, breakout is not possible. It will lead to a false breakout. So in that case, okay, you need to be sure, wait for some time. If you see the market is going up with a big green candle, it means that market has volume, then only go for a buy position. Today is Friday, be careful, do not take a bad trade and lose all the profits of the whole week. So okay, so if market goes up, breaks 2010 level with volume, you can go for a buy position. For additional confirmation, you can look at the chart of DXY and the US government bond. Okay, or in case market comes down to the 1969-68 level, if you see market taking support around a moving average, around this particular zone here, you can go for a buy position as well, because this is the only logical support for the Friday trading session. If I take you to the 15 minutes time frame, on the 15 minutes time frame, you can see that we have some support around this level as well, but to be honest, I am not convinced enough. So as a result, I will not recommend any buy position around this area. But yes, there is a possibility that during the Asian session, especially if market remains low volatile, and if you see market taking support around 1983, if you see market taking support around 1983, then you may look for a buy position, because we have the 100 moving average as well as the previous resistance to act as support. So previous resistance to act as support plus 100 moving average, but this level we have derived on the 15 minutes time frame. So as a result, be careful. Never forget, low time frame, low reliability, higher time frame, high reliability. If you are a trader who is not in a position to lose any money right now, you are in a very tight spot, then 1983 is not a level for you, because this is a weak level. Okay, if market is low volatile, if you see the market is coming down, then market is going for a little bit of a bounce, then only go for a buy. But otherwise 1969, 60, 65, this is a proper level. Okay, so we have two levels on the chart of gold in the form of support. 1983, which is a weak level. Day traders, you can look for a buy if you have the experience and the risk appetite. Otherwise 1969 to 64 is a proper support. On the other hand, if market breaks 2010 level also, you can go for a buy. Lastly, let's have a look at a chart of US government bond. As I mentioned yesterday, that the next low of US government bond will be extremely important because market broke the previous high. So if market starts going up without breaking the previous high, okay, it will be a formation of a higher low. If market forms a higher low on the chart of bond, then there's a possibility that by next week we will get to see a trend reversal on the chart of bond. So the next high on the chart of bond will be very, very important. Today is Friday. Be careful, my dear friends. This is my analysis. I can be wrong as well. So please follow proper risk management. As I always say, do not gamble with your hard-earned money. Do your own research, analysis, and the proper calculation. Bye-bye. Take care.